If you've been keeping an eye on oil prices, you know how things have been wild. But what factors actually cause the fluctuations? Well, in this video, I'm going to be breaking down some of the headlines and giving you the inside scoop on what's happening inside of the oil industry from east to west. For most people, they simply go to the gas station and that's how they learn about gas and oil. But if you break it down on the industry levels and you look at shipping and you look at imports and exports, we get a much more broad view and a better understanding of what's happening. Well, recently, US oil exports to Europe hit a record high. Some attribute this to the steep discounts from American suppliers. At the same time, oil prices have been on a downward trend overall. I'll show you the charts, and that has caused stocks to dip within the industry. On the other hand, Chinese oil demand has only continued to surge, and that has been leading to higher shipping costs. This all affects you no matter where you are. So here we have it. You came here for the truth, so let me unveil that for you. US oil exports to Europe hit a record in March on steep discounts. So it depends on who you ask and it depends where you look really, but this is really important thinking about it, okay? They hit a record 2.1 million barrels per day on average. This was not something that we would say, a year ago or whatever, when Europe was getting all that nice gas, for instance, from Russia. When they were getting the oil, they were able to get these things from Russia. Now things have changed. It's just like Japan. It's just like other countries. And it also changed the dynamics between Russia and China, Russia and India. They have grown closer and closer together. So when we look at it, the beneficial aspect here is that suppliers in the United States are loving it. They have a new place to sell to. The unfortunate part about this is that, when there's less supply in the United States, that means the price will be elevated for you. It all depends on the demand that's there. So we will see this, and I think it's important to follow it because oil affects everything. In this case, surging Chinese oil demand pushes shipping costs sharply higher. And shipping costs are already quite excessive when you look at it, but this is just one example of it. A burst of US exports to China is driving up charter rates for the world's biggest crude tankers. This is not necessarily going to affect everything that you got to deal with, but in this one aspect, that's what we're seeing right here. And we don't need costs to go higher. There's already too much inflation. Here is the price of oil as I record this video. You're looking at WTI at $69 a barrel. And so it was at 80. If you can see that chart over there, that's the last month. It was 80, fell down real far, and it's come up a little bit here as the stock market trying to get some love. But you see it in the way that it's been, and the concern is, hey, if we're going into a recession, if we got a bank crisis, this is 2009 scenario, early 2009, well then probably not going to need as much oil. Okay, so on and so forth. So, these companies have been selling off. That's the expectation. We'll see what happens. Because if they start to ease, if the central banks start to actually print money, cut interest rates, and so on, you got to understand this. When that happens, you basically put gasoline on a fire. It's inflationary. It is very inflationary. And that means you want to hold real assets. That's the important part. Okay. And by the way, call me out on anything that you see me not like. If I'm showing you something and I didn't make the point for you, ask me about it. Ask me in the comments below, and that's going to remind me to make those points and have those takeaways for you. In fact, on the insider's email that I send out to people, thousands of people every single day, on the insider's email, I'm going to put the takeaways in there for you too. If you ask me for that, I will do this. Okay, let me know. Insider's email, it is themoneygps.com. Scroll down to the bottom and just fill in your email. I'll send you the email of the day, which is basically the video of the day. So make sure you get the video. Looking at oil prices, the possibility of $40 a barrel. So we are at 70 at the time of recording. And the suggestion is, could it go to 40? Look, we've been there. It wouldn't be the first time at 40. You've seen it yourself. For a long time, in fact, it seemed like it was like $40 a barrel and even dropping to $30 a barrel, coming back up to 40. The problem with this is that a lot of, all the shale industry basically is not profitable at $40 a barrel. So then the US doesn't want to dig it up. So what happens to those jobs? What happens to the prices? That can kind of keep it up. So it's supply and demand, but they don't really want to do business anywhere near these prices. They might still do it in hopes that, okay, let's keep this aside and maybe we can sell it later, but how much can they do that? How much can they stockpile? How much can they just wait? They don't like this at all. So the industry really suffers. And so the areas where they're pumping that oil, they will suffer too. The real estate, the jobs, everything interconnected. Okay? Keep an eye out for that. So the next thing here is really quick. I just wanted to talk about oil spills. And that's been happening here. It is not uncommon. And right now I'm going to show you a couple examples of where this has happened, and even strikes. So factor that in as well. We have problems. The reason I mention this is supply and demand fundamentals are key, but this could be for any reason. Could be, as I'll show you, a strike. Could be because of an oil spill, but that affects every single industry. You have suddenly a disaster in Chile because of an earthquake. Well, then copper is not going to come your way. Okay, so watch out for that. UK strikes to cause a tsunami of unrest for the North Sea oil and gas. We got to get people working. We got to get business moving. We've got to get things importing and exporting, or we have a lot of problems. Where do we see that? 2020. I need to get my toilet paper. I need my toilet paper. I got to go to the washroom. I got no toilet paper. What am I going to do? Oh, it's sitting on a ship overseas and I can't get it in. I'm in trouble. I'm in big trouble. Okay, that's the kind of thing that was happening. That's an extreme example. I'm just trying to make light of it, but you see that. You saw that, and you saw what happened to people. They panicked. They went crazy. What am I going to do? Kuwait giant declares emergency after oil spill in the western region. About 350 gallons of oil spilled in New Berlin. The city has declared a state of emergency. So these things happen, and it disrupts the flow, disrupts the supply chain. So this is always something to keep an eye out for. And what I wanted to talk about as well was the ongoing demand for oil and gas in Asian markets has vastly impacted the global supply chain. In recent years, Russia has overtaken Saudi Arabia as China's primary oil supplier. But also at the same time, it's not as if China's not doing business with Saudi. They're good friends right now. It's just that the business between Russia and China is basically surging. Okay? And they've become China's primary oil supplier. Key players have had to adapt to the changing dynamics of oil flows. Russia overtakes Saudi Arabia to become China's top oil supplier. You could see it right here. Imports of Russian crude hitting 1.94 million barrels per day. Chinese imports of Russian oil jumped 23.8% year over year. Big stuff. It also shows you that China still has that demand there. Big stuff going on right here. How China and India's appetite for oil and gas has kept Russia afloat. So while there's been so much of the sanctions happening, crazy stuff with these sanctions, well, basically India stepped up, China stepped up, and they said, we'll take it, bring it here. And so they've been doing that. And now what's going on is Russia is saying, we're going to do deals in the Chinese currency. We're not going to use the US dollar. We can't anyway because we're sanctioned. And so these countries are, for better or for worse, because they want to or don't want to, they're forced into it and they're becoming partners. I covered that in yesterday's videos where I looked at that. And so for a lot of people, they don't realize how important this really is. Strong Asia oil demand pushes key Mid-East spread to 2-year low. Brent's premium to Dubai crude has fallen to 1.54 a barrel. Development signals Asia's robustness relative to Europe and the US. We see that. I mean, it's clear that the growth comes from the emerging markets, and if they have enough stimulus behind them, whether that's coming from, let's say in China, they're getting bank loans, they're trying to just build empty homes, empty cities, just get that growth happening, and the demand is going to be there. It might be false demand, but the demand is going to be there. So we see that right now, and Russia is able to benefit from this. If China is buying a resource from a particular country, from your country, wherever that is, that's beneficial in that way. If there's still that demand, even if it's that sort of false demand, they get to benefit from it. Okay, so watch that very clearly. I think it's real key. I think it's important. I hope that this was informative to you. If it was, don't forget to hit that like down below. And anybody who joins the Insiders free email list, themoneygps.com, scroll down, you're going to be able to get the latest and greatest from me directly, and you can converse with me in that manner. And I send that email to thousands of people every single day. If you signed up to the email list years ago, check your junk, check your spam, could be in there. That's it. I'll see you tomorrow. Take care.